This is Kali Persall, editor of Institutional Investing and Infrastructure. Joining me today is Jim Hughes, managing partner at EnCap Energy Transition. So we have a series of questions here that really encapsulate the US energy transition. Before we get into those though, Jim, can you just start with a little background on EnCap and what your responsibilities are at the company?
Sure. So EnCap is an over 30-year-old investment manager focused on the energy industry. The origins of the firm are upstream oil and gas. And then 5 years ago, they added the energy transition investment team, which is the group that I lead.
So when it comes to the expansion of this renewable ecosystem, there's been a lot of recent M&A activity in the infrastructure space. I'm curious, are you seeing more activity in M&As or greenfield projects? And does there seem to be a preference for one over the other?
I think the observation I would make is if you go back 5 years, you really sort of had this explosion of interest in the energy transition. It preceded the IRA, but also accompanied the IRA. And you had a lot of capital that was devoted to project development across the entire renewable spectrum. As a result of that, you had the development of a very, very large pipeline of development projects across the spectrum. In 2019, 2018, even 2020, I think there was a viewpoint that there was a lot of value add to be gained out of greenfield development. I think today there's still a need for and room for greenfield development, but I think it's more selective. It's filling in gaps here or there. There is a large volume of development assets at the mid and late stage. And so I think there is an opportunity to do M&A that exists today that did not exist 5 or 6 years ago. Certainly not at the volume. If you look at the interconnect queues, if you go back a year or a year and a half, you had a total interconnect queue in the US that was equal to the total installed capacity. So what that tells you is not everything in the queue is going to get built. And that there's going to be stuff that falls out of the queue over time. So I think that's a dynamic that really has developed over the last 5 years. I think a lot of that development inventory will rationalize over the next several years, and we'll probably wake up 5 years from today, and it may look different. It may be that you don't have a lot of development inventory. A lot of those projects have fall to the wayside and they need to be redeveloped for sort of from a greenfield standpoint. So, but that cycle's always existed in the business, and I think it will be cyclic and it will continue. But at the moment, I think our observation is there does seem to be a lot of mid and late stage development that's available for acquisition.
Yeah, very interesting. And thanks for sharing that. So as you're aware, before Donald Trump took office for his second term, there was a lot of speculation about how things would shake out with the IRA and the tariffs and more. You kind of touched on a little bit. Now with the administration a few weeks in, do you think we have a better understanding of how the administration might positively and negatively impact the investment opportunity around the transition?
Yes and no. Um, so he's issued several executive orders that, we now are, we know they're out there and everybody's working to understand the consequences. We knew that EV incentives were going to be a target, and that has, quickly proven to be the case. We knew that offshore wind was going to be a target, and that has quickly proven to be the case. I think the extent to which the administration is showing hostility to onshore wind is a bit of a surprise. A couple of weeks ago, President Trump made the statement that his goal was that during his administration, not a single additional windmill would get built. I think everybody's a little surprised on that. We've confirmed what we thought, which is that this administration is going to work to promote the development of fossil fuels. I think they may be working to frustrate renewables a little more than we thought. I think utility scale solar looks safe for the moment. But the meanings of the executive order. Is it a pause? And then once they have clear guidelines and new managers in place, they're going to resume issuing permits. We don't know the answer to that question. How wide is the scope of the executive order? All of that is still a little bit uncertain. I think the other thing that we're all waiting for is we know there are going to be changes to the IRA. The scope and exact nature of those changes is yet to be determined. We don't have any draft legislation yet. 6 weeks ago or 4 weeks ago, I would have said, we all had what we prognosticated was the outcome that we were going to see, which was basically shortening the timeline of the core renewable energy credits. We knew likely the EV credits would go away, shortening of the timeline during which the renewable credits would be available. Given the hostility that's been demonstrated in general, but towards wind and onshore wind in particular, I think everybody's scratching their head a little bit and saying, do we really know what's going to come out of Congress? We know there are a significant number of Republican congressmen that are opposed to wholesale repeal of the IRA. And I think the exact word they've used in correspondence that they've sent to the president is, it needs to be a scalpel, not a machete. So I think we know a little bit. We know that some of what we feared is coming true. Long term, I think there's a lot of us, myself included, that believe even in the absence of the IRA, there's demand for renewables, and so there is a place in the energy mix for renewables. There's an opportunity in renewables. It's the short-term uncertainty that creates a challenge. That will eventually be resolved one way or another, but it could be painful for the industry over the short term. So I think everybody's going to be keenly watching to see what this reconciliation bill looks like.
Absolutely. Thanks so much, Jim. Just kind of rounding out our discussion here, and I appreciate you really touching on so many aspects of this. But how do you feel about the long-term trajectory for the transition and the returns it could generate for investors?
I think long term, you can't have economic growth without growth in your energy complex. There is a broad belief that we do need to address the impact of CO2 on the climate. I think the debate is about the urgency, and it's fair to have that debate. I think that renewables can be a significant part of the solution, and they can be a part of the solution without a tremendous impact to the cost structure. It won't be as fast as, you know, major climate advocates would hope. But from an investor and from an industry standpoint, I think it is a technology, it is an asset class that is here to stay, and there will always be opportunity. The scale may vary depending upon where we end up from a policy standpoint, but I think there's a place for it in the energy mix going forward.